All right, welcome everybody. This is CyberBulls. So first and foremost, this is a show about investing, and of course, it's also a show about Tesla. One of the things we keep hearing from everybody is, why are you inviting these bears? Well, one of the questions I want to ask everybody is, what is your definition of a bull, and what is your definition of a Tesla bull specifically? And I want to know from each of the guest panels here. The panels, the only guest is Gary Black. The other panel members is, what is your actual position? We're going to have Tesla boomer mama Alexandra did a lot of work in doing some research in details of, should Tesla get into financing? I'm really looking forward to that. And then also, if we have time, we're going to go with Jeff Lutz, is going to explain to us his expertise in supply chain and inventory, what is happening in China, why is there so much confusion that's happening there. And then we have Christian here with us. He's an absolutely still a bull. I'll let him use his own words, just not as bullish in Tesla this next 6 months. Welcome again, Christian. And of course, we have Gary Black with us. So Gary is the managing director of Future Fund, and he has been on CNBC. Is quite out there explaining all sorts of things, and we want to understand what he thinks is right. And many of us don't agree with a lot of things he's saying. So we're going to help set him straight a little bit, right, Gary? You'll be open to that?
Sure. Used to
okay. That. Welcome, Gary. Appreciate that. So let's get started. Let's go around the room here. What is a definition of a bull, and what is your position? What do you think, Alexandra?
I try to stay a very realistic bull. So I really try to all the time question my own reasoning, question the reasoning of people that may have a position either more bullish than me or less bullish than me. I hardly speak to bears, but I have to say even some of them do some reasoning I'm interested in. So for me, you all know there's no other company I even look at. I don't think it's worth that, any other company uses my time, my research whatsoever. But that doesn't mean I'm completely blind. I'm sometimes wondering about certain decisions. I'm sometimes questioning certain decisions. Obviously, I hear from everybody, you don't know better than they do. No, I don't know better than they do, but I do understand that, sometimes they may be wrong as well, and they're actually admitting it freely. So I'd call myself a realistic bull, and I'm currently invested. All my IRAs are nearly all in Tesla. My trading portfolio is all in Tesla, with some options for January 24 and January 25. But half of my 401k is currently in cash, and I'm waiting to slowly get back into the stock, because I do believe that we'll see some weakness still in the weeks and months to come.
Thanks. Okay, Jeff?
Yeah, I think being a bull, you're generally positive on the company, and you're looking at the company kind of in a positive light. You're probably invested in it. But I think you labeled me in the beginning as the rational bull, and I do really enjoy listening to bears, especially informed bears or just informed data sets. I think that's the other key thing is, if there's a data set that's well informed, it's worth the time to look at it and understand it. One of the things I do see though happening a lot on Twitter is just any graph or chart that's published is literally taken as, well, this is data. this is good. This is from the company, or this is official and this is good. And you really have to double click into what you're seeing and try to understand it. I've been invested in the company for 10 years now, and an owner of the products for the last 10 years now. And it's, I do have a decent, size position, but I also own and trade other stocks as well. So I think it's ultimately up to the person, their position, their comfort level, their, where they are in life and where they want to be in life in terms of how they want to deal with their own money. I don't want to come on Twitter and tell people you should do this or you should do that. I don't think that's helpful, but what I do try to help people with is trying to understand some of the data that's out there, especially as it relates from an operational or supply chain perspective, and what it could mean to the company going forward, or to any company going forward.
Okay. All right, well, let's get to you, Gary. So a lot of people kind of a little bit not so happy, a little bit of it that way, that you are joining us today, because they think that you've been a lot more negative, especially in the last several months. You are an investment manager. You have Tesla as one of your top positions, but you've sold recently, which is nothing wrong with that. But you've also been very critical of Tesla in terms of advertising. I don't know if the word is critical or just that you have a lot of advice that you want to give. So let's hear exactly what is your position here.
So I'm going to take the institutional definition of, if you like a name, you expect it to outperform by usually 15 to 20 percentage points. So if you think, and you have to measure it versus comparable stocks. So we measure it versus Russell 1000 growth, which is where Tesla sits. And so, if you think Russell 1000 growth it's up 14% this year, so you would expect Tesla to be up, 30%, and then you'd be bullish. And then you have to put a time period on it, because as Alexandra said, you might think a stock is cheap from a present value standpoint, but if you think the expectations near term are too high, we don't hesitate to get out of a name. And we've gotten out of Tesla once totally when they bought Bitcoin, and we thought their guidance, they didn't give any guidance. That was back in 2021. And we felt that the stock in the near term was going to fall, which it did. And then we got back in. So you can be a bull long term because you think that the present value of cash flows or the present value of earnings, is way above where the stock price is. But you may not want to be in the stock today. That's why I'd love to hear Christian's view, because you think the short-term expectations are too high, so we, just to answer your question, we have a 5.6% position in Tesla. We've been as high as, 10 more recently. I think right before earnings, we were at 9. The reason we cut our position is because we didn't have conviction anymore about the downside, because we felt that, we knew gross margins after they took the prices down would probably be in the 18, 19 range for the first quarter, which is where they wound up being. And our view is that they'll probably bottom in the second quarter at 16. So we're looking for some hint from management that second quarter is going to be the bottom. And if we could get that hint, and, we can talk about later, what last night's, modest price hike meant. If we could get a hint that they weren't going to take prices down anymore, we would probably increase our position back from, 5.5%. But we're bullish in the sense that Tesla's still our second largest position, but we're not as bullish before because we thought that Tesla had significant downside from where we reduced it, which was at about 180, and I guess today we're at 160 or something. So,
thanks, Gary. Yeah, go ahead, Christian.
Yeah, I loved everybody's comments there. I'm a little bit different. Like, I don't have to be fully invested all the time. So, like, the way I think about it is, am I a bull? I've owned Tesla since 2019, and I rode most of it up. And lately, I've been trading it a lot and kind of playing that a little bit. My recent decision is more of a macro call. I just feel that the environment is not great for stocks in general. That's just my opinion. We're seeing that a little bit play out today, and the Fed's going to go tomorrow, so this should be very interesting, right? Because they're kind of stuck a little bit in a rock at a hard place with inflation and with a deteriorating economy. So this should be interesting. But as far as Tesla goes, I would never short Tesla. I'm not short Tesla, but I just am not bullish right now, meaning I cannot have a significant position in Tesla for two reasons. A, I've just been vocal about what management's doing. I've disagreed with it. I don't agree with the strategy. And I believe that what they've done over the last year has, lost some trust. I know we talked about this yesterday, so we don't have to relitigate it. But when I lose some trust with management, I reduce my position. I don't hesitate to just sit there and hold it just because, of some reason of sentimental value. It's been good to me in the past, but if I don't believe in the next 6 months it's going to do much, comparison to some other stocks like Gary owns, even Chipotle, it killed earnings. It was up like 10, 12% on earnings and continued through that, even with that big gain. I've owned that. So, I see other stocks and management able to go through and navigate this macro environment where I see Elon, and he did it again. He's talking about the Fed and recession, and a major recession's coming. How could I have confidence when Elon is worrying about what Jay Powell's doing to his business? How could I get bullish in 6 months if the Fed is raising rates, which they're probably going to go another 25? How could I buy this stock with any conviction and hold it when the CEO is telling me bad things are about to happen to his business, essentially, without actually saying it? I'm reading between the lines. So if I'm wrong and the stock goes up, okay, I own other things. I could buy it. We're still well under 200. I've gotten rid of it kind of where Gary got rid of it in the 180s and this, this late 80s. And a lot of it went around over 200. After it dropped to 100, I got rid of it. So, I've entered, last week I told you, I don't own it at all because I just didn't see a reason. And until the macro clears or until Elon gives me some sense of confidence, it's very hard to get bullish. Now, will I get bullish in the future? Yes, absolutely. I think they're a great company. I think they're a growth machine, or were a growth machine. They were a margin machine, and that's why I own the stock. So when Elon's telling me margins could possibly go to zero, even if they don't, when I could see from my own eyes that growth is slowing, we're nowhere near that 50%. And when management has told me time after time over the last conference calls that certain things are going to happen and that they don't, I lose my trust. So at this moment, I can't get very bullish on the name because I have no reason to be bullish. That's just my opinion.
Hey, Christian, can I ask you a question? When you see management start talking about the economy, is that, and using that as a reason for why things are not good,
right,
is that something that you take into your factors as if you can invest in something?
Absolutely. I personally do. When I hear Elon on conference calls or just tweeting out things about the Fed and tweeting things out about how, we're going to hit a brick wall or whatever, how could I get confident in the business if he's so worried about the Fed? And he talked about it numerous times. Now, maybe I shouldn't be worried, but I am. And I feel that, good things aren't going to happen. And when Elon speaks and he says that he's going to take the business down to zero and grow the volumes, and margins might go down to whatever they're going to go, operating margins 3-4%, the profits, because I was going into this year thinking they could maybe do $5 in earnings. But now it looks like we're getting closer to this $3. Well, now the stock doesn't look cheap anymore. To me, it looks like it could be a little bit of expensive if he's going to destroy the EPS and the margin. So I don't think it's a value play anymore. And the growth is slowing. So we have a slowing growth. We have decreasing margins. We have profits going down. And we have the Fed raising rates. And we have Elon talking about how the Fed raising rates is the most calamitous thing since ever. So how do you get bullish in that environment? I'm just thinking logically through it. I can't.
Let me answer that then. I can tell you how to be bullish on this environment.
Well, I know. You did.
All right, guys. Week. So here's how I say it. Okay, we are all investors, right? Because we all have money put inside this company. But we are all very different kinds of investors because you guys look at things very differently than I do, right? You guys are looking at earnings. You're looking at quarterly. You're mapping it out whether or not the stock's going to rise or fall. And I'm going to see if I should time it now or sell it here or sell it there. You guys would never have invested in McDonald's as a first example, right? So what business is McDonald's in? When Ray Kroc first visited the McDonald's brothers, what business do you think he saw them in, right? Most people will say they're in a restaurant business. And they themselves actually tried to franchise it, couldn't go. What Ray Kroc saw was that this was not a restaurant, but actually a restaurant system. He was shocked that they were the only restaurant that has ever ordered an 8, milkshake machine that he was selling. That's the difference between me and you guys, right? Because I look at this company, I don't see them as an earnings machine or a car manufacturer. I see them as an innovation machine, right? They make innovation. They make products left, right, and center. It's amazing all the products they're doing right now. They happen to do automobiles first, but they're doing all sorts of other things. And so, it's like I'm putting my money in the company that has the best innovation culture in the world and the execution culture. So that's where I'm going to put my greatest amount of money. It happens to be one of the strongest balance sheets in the world. Good luck with Chipotle, okay? I mean, imagine, they look good.
But how do you know?
Go look at their returns, Herbert. Their returns have been stellar.
It's a good company when you look at it by quarter.
Company.
It's a great company, but they're not. They're a great company for a quarter. But who's going to deliver me the greatest amount of investment return in the next 5 to 10 years? It's not going to be Chipotle. I'm going to put my money in the thing that's. You guys are looking for doubles or triples.
No,
I'm looking for 10x and 20x. Can Chipotle 20x? No, Jen, can Chipotle 20x?
From its IPO, it probably has.
Yeah, but not now, right? And Tesla today can 20x from today. That's what I'm saying. That's where I'm going to put my money on.
I'm not sure.
Hey, Herbert, you love the company, but how do you like the stock if you don't pay attention to earnings or cash flows? Because that's the classic mistake. that retail investors make. They fall in love with the company, but you got to also fall in love with the stock to buy it.
Yeah. So the way I look at it, it's like you guys would never have invested in Amazon in its early
That's not true. That's not true. I owned Amazon back when it wasn't
when it had 75 PE, when they had zero earnings because they kept counting the money back.
No earnings. I bought Tesla back.
Okay. So, Gary, I'm so shocked that you told me that. So you will invest. So why are you complaining that this company has an 18% earnings margin rate and the growth rate's at 30%, it's a 50% during a macro environment? Why are you now going, okay, I'm going to pull out all my money? This is the time to keep putting money in because it's going to, it's dollar cost averaging, right? Instead of you hoping that it's going to fall because of this number.
I agree with the strategy. Like Christian said, if we can look at the price cuts and say, okay, they're going to take margins down to maybe half of where they are today. And we think that's a dumb strategy. Why do we think it's a dumb strategy? Because they're never going to get the volume back by reducing the margins. Why? And we've laid out that the demand elasticity for Tesla is very low. Okay. And so unless we believe they're going to get the volume back, why would you buy a stock here or own a stock here if you think the earnings are going to collapse? And I'm not saying they're going to collapse, but if they don't get the volumes back, you don't have a really good stock. You may have a great company, but you don't have a great stock.
Can we have a thought experiment on that topic? Is my mic okay, Herbert, or is it still crackling?
No, but it's still crackling quite a bit. So I want just to answer this question of what am I doing? So you missed it because I talked about it last week, Gary, where I was saying that yes, it's going to crash this year, but I'm actually very, very happy with the strategy of volume versus margin, because what's going to happen now is two things, right? This year, they're going to be able to reduce margin. Why? Because they're going to have, finally, ICE cars are no longer going to be able to survive when Tesla cars are that much cheaper. Oh, did we lose them? That much cheaper, right? And then once you get that, so I'm going to make more money in next year than if they didn't do this volume versus margin play right now. So I'm going to have short-term pain for 3 times greater long-term pain next year and forever for the next few years. I think we're gonna, as a company, is even stronger now, and so I'm gonna let that go. So I'm very, very happy with that strategy.
What if they reverse strategy? What if they realize that the price cuts are not getting much incremental volume and they start going the other way? Would you like it more?
Yeah. No, it's not that I'd like it more. It's like I believe that these guys have variable pricing. They're going to lower the price. They're going to raise the price. I was already saying even a couple of weeks ago, they're going to raise the price and just a small little bump is all it's needed. And right now, you just tweeted out earlier, you think that that's great and now there's a floor. No, Tesla's going to do variable pricing. They're probably going to lower it even some more. In fact, they'll keep lowering it because their ultimate goal since 2012 is to go mass market as many cars as possible. Remember that strategy? Sell the Roadster, make the profit, sell the Model Y, Model S, make the profit, sell the Model Y, make the profit.
Herbert. This is not consistent with that. What's consistent with what you just described is going from Roadster to S to 3 to 2, not going from Roadster to S to 3 to let's discount Model Y. Discount Model Y has nothing to do with Master Plan 1. You're just discounting a luxury product. If you want to get to the big TAM, which is the $25,000 and below car, bring out the Model 2. You don't discount Model Y at $50,000.
Yeah, they are going to bring it out. They will be bringing that out.
But that's where they should be focused, not on discounting their luxury best-selling vehicle in the world. That's not going to drive it. Do you really think it's going to drive affordability to bring Model Y down from $49,900 to $48,900? Honestly, you really think that's going to open up?
No, I agree with you there that reducing the Model Y prices is not going to drive affordability. That's just they're going to raise and lower the price because it's variable pricing based on locale and so forth. That's not, they get a $2,000 reduction. It's not because I should have advertised instead of a reduction of $2,000, and they're going to raise it again. It's just going to keep going up and down as whenever they feel like whenever they can see their data telling them.
And I want to add here, actually, but I think they don't realize that there is a consequence in their price adjustment model that they haven't taken into account. It means that banks that have Tesla owners' loans on their books actually have to readjust and have losses to take into account just because the cars now have less value, the new cars. And if ever they would have to repossess the cars, they would have less value. And I think that is actually the main reason why Tesla and Elon is complaining about Tesla owners having problems finding financing. I mean, I'm getting to the whole financing subject later, but I mean, Herbert, one thing I want to say is I do understand Tesla is experimenting and sometimes, has the right idea, and sometimes it's subpar and sometimes it's really bad. But I do believe with this variable pricing strategy, because they're the only ones, they don't have the dealerships to have the buffer that the prices don't really transpire into the open market. What comes with it is that banks need to readjust their loan portfolios constantly to the new Tesla pricing, and that is actually then triggering the reverse effect, just making banks less likely, banks already being in a stress situation anyway, but banks making them less likely to want to finance more Teslas.
Okay, I just want to quickly say something, then we'll get to Jeff. The reason why, what they think they're doing with Model Y is if they can bring the Model Y to be the number one selling worldwide, global selling car in the world, that is worth so much more than any kind of advertising you need to do. Let's get to that. That's the goal I think they're trying to get with that one. Go ahead, Jeff.
Hey, mic test is still okay or
better now?
You're better.
Okay. Just backtracking on some of the comments. So first off, on the where are the margins? Where's Tesla going to take the margins? I don't think any of us know. I think Elon said something on the conference call, and again, from a Wall Street analyst perspective, I do agree with Gary that saying you could use the word could and technically take margins to zero is probably not the greatest thing to say on an earnings call. I think a lot of ears went up, and that was probably one of the most quoted things from the call. But a lot of people didn't go back to the transcript and see technically and could. But in terms of a thought experiment, if Tesla were to just have their margins and cut it down to 10%, I mean, it's going to take a little bit. It would take a couple quarters of time, but I think that would put competition. If based on where they're at today, it would put them in a worse spot. Now you say, okay, well, we don't care about the competition. I care about Tesla's earnings. That's how the company is valued. But if that is one of the bare thesis, is that the competition is going to come and swallow up that market share. And if they're not able to compete economically, they won't be able to do that. So, I mean, that's one of the core things behind it. I think it's a temporary thing. I think it's almost a little bit of a spring under compression. I've used this analogy before. Their margins are going to be under pressure for a couple of quarters as they work through this transition of old raw material under older contract pricing, bought at COVID highs and bought at COVID levels in terms of supply discontinuity. That material has to work itself out of that system. Some of that material will take upwards of 6 months or more to completely work through the system, and some of those contracts are actually longer and even re-up during that time period that need to be relooked at. And in terms of all the other automakers, by the way, they're in the best position from a leverage perspective to go have those contractual discussions. So I think this is a timing thing. I think these COGS reductions, first off, they were pretty significant from Q4 to Q1, but not enough, obviously, to swallow almost 10% average transaction price reductions from Q4 to Q1. But I think they're going to continue, and I believe this is a bit of a timing thing, both on their COGS reductions as well as the competition and their ability to just literally to be sold side by side when you have Teslas at this new pricing. Finally, this whole thing about like all the pricing changes, I would have to think like, so we're in this Twitter bubble and we see the pricing changes as soon as Sawyer tweets them, and we get them in a minute. Guess what? The rest of the population, may not see them for days, weeks, maybe even months. And that could go back to an advertising conversation. But the point is it goes back to my timing point, which is some of this will take a couple quarters of time, but in general, a large population of people are going to realize you can buy an EV for greater performance and greater quality for the less price of an average ICE. And over time, I think that strategy is going to work.
Yeah, I mean, I agree with you, Jeff. What I'll say though is in the interim, I think long term Tesla, it's a great company, and I've said this a million times. And I think over time, yes, they will show, what they're made of. But in the interim, I still think we're in this point of, I think Mercedes came out with a report. I don't like comparing Tesla directly to other auto manufacturers, but it seems like there are auto manufacturers doing okay in this environment, right? They had a nice report. I look at now China, and I do see the competition coming in China. That's Tesla's largest market, right? And we see some of those cars look really nice. I'm just looking at them and I'm like, wow, they're getting faster, they're getting better. So competition, I always said, was never coming. Over the last month or two, I'm changing my tune a little bit about that. I believe there are products now that are entering the market on the EV side that are actually a little bit more compelling. Hyundai has a nice vehicle. So the whole thing isn't there now for Tesla just to take. So with these margins coming down, with the macro, with Elon, with other manufacturers, especially in China, getting more competitive, and then again, I'm just going to do a quick little discussion. We see the domestic market in China cannot soak up all of Tesla's supply. And what they were doing is exporting it to Europe, right? This has changed now. What has happened is there's not as many boats as there was last quarter. To me, that's saying, okay, Europe demand seems like it's slowing down. The domestic market in China is increasing, but it's not increasing as fast as they're losing exports to China. Now we see them exporting to Canada. And some people are saying that's a good thing. To me, that's a bad thing, because I talked about this the other week. If they're exporting to Canada and they're sending these materials from China all the way to Canada and not Europe, and they're not sending a domestic market, that's a huge cost on transportation. Why not just move it up either from Fremont or from Texas to Canada to get those delivered? So to me, that's a little bit of a flag saying they have product out of that Shanghai plant that they can't either move to Europe and they can't move it in the domestic market of China, and they need to send it to Canada. So I wasn't really a big fan of that. To me, that was a little bit of a flag. Other people have different opinions, but I just see that production is starting to outstrip demand, not because they're a bad company, just because of the macro environment. And for whatever reason, the Tesla growth story is slowing down a little bit in this environment. It's just a fact. And
Okay.
that's the way I look at it. I'd like to get anyone else's opinion. Yeah.
Yeah, well, you're going to hear my opinion, because there's a couple points you made that I just want to make sure that you say it's a fact and it's not. So when you say that there's competition coming, yes,
there's my opinion.
There's a lot of competition coming, but at the end of the day, we just continue to look at the data of the Tesla Model S outselling every single model out there. So sure, Hyundai has a car. Come back to me when you see that thing kind of getting up close to Model S sales. So yes, there's lots of cars coming, but you got to show me the data. And the Giga Shanghai sending some cars to Canada. I just had a fantastic interview with Brian White, and he said that the transportation cost is $1,000 per car. It's very little. It's not that big of a deal. And the reason they're doing it is because of China's version of their IRA, why they're doing that. So you're coming up with a bunch of reasons that you got to dig a little deeper, and you'll find out it's not really what you're thinking it is.
Okay.
But when companies are growing, that's what you actually do. When you're growing, you balance supply and demand, and you have to deal with these things. So you're bringing up a new factory and you're going to localize production. Well, then you're going to take down supply from another factory, and then you're going to deal with that. So there's one comment just regarding European sales slowing down. I mean, there was just a report that came out this morning that said April was the best, I think, first month of a quarter ever, and by a large margin in April. So we're lucky that we're at this point in the quarter now where we can actually get first month data and see. So I mean, I don't know. I think some of these stories are actually starting to connect together for me. If you see inventory rising, it means you're serving, most likely larger production volume, like output from the factory. Like what was produced yesterday in the factory is going to go into inventory somewhere and then be sold in a couple of days or weeks. That's how it works. And if you're producing more per day and your sellout velocity is increasing, which it looks like is happening in Europe, you're going to need more inventory and you're going to have more sales. So that's what the data is showing right now.
And let me just say real quick, and then we can go to Gary or Alexandra. I'm not saying I'm right on the Canada thing. It was just something that I was thinking about. And I do notice that there's less boats at this time than there is in normal quarters. Now, I think that's a fact. So they're not shipping as many over to either Europe or wherever it's going, Australia. And then we also have the domestic market. It's doing okay because they're not exporting as much. So they're going into China, but it's not enough to offset. And I think Q2, I don't know what your delivery expectations are. I'm not much over 440. So if we're going to do 440, and remember the price cuts in Q2 just hit, they weren't in Q1, so we're still getting some of those price cuts come through Q2. I don't think margins are getting better anytime soon. I think gross margins are going to go down. I think operating margins are going to go down, and we're going to have our growth on deliveries quarter over quarter is going to be 4 or 5%. So I don't know. It's right now. It's a tough time. Again, it's not that I'm bearish long term. It's more of a short term thing, and the macro and Elon not giving me a lot of confidence in the next 6 months in the business.
Christian, just one to address one point on the less boats. So from the beginning of Q4 to where we are today, Berlin has more than doubled their weekly output. So they're actually producing localized supply for the region in greater quantity. So that's why you would need
that's a good point.
less boats.
Yep.
But
That's a good point.
Isn't that a problem? Can people hear me?
Yes.
Okay. Isn't that a problem because you've got Berlin ramping up, you've got Austin ramping up, you've got a lot of supply coming on, and yet demand, and I think Christian said this before, if you look at year over year, it's only like 33, 35%, where production's growing at 45, 50. So that gap is causing them to discount. So if things were going as well as Tesla thought, they wouldn't have to be discounting so much. And isn't that a challenge?
Well, the demand available at a Model Y, a $65,000 Model Y, which I think where we were in Q4, or 60 or 65,000 versus the demand available at 46 or 40. I mean, of course they're going to be different. I don't think, again, Tesla has to make these capacity decisions 9, 12 months in advance to order the automation and to hire the labor and ramp them up and get them ready. So they were basically pointing to next year and saying, look, we're going to probably have 2.2 million capability of production. We're going to install it. We're going to hire and bring up the people. But I don't think they believe that they were going to be able to do it at the original transaction prices from COVID. Those were inflated due to input costs being higher and supply being lower, generally in the auto industry.
Yeah, and I agree with you, Jeff. But the reason that Tesla got the market cap it was because, and even the bulls said it. Why did Tesla go to 2 trillion? It was because they had fantastic margins. Now we see other car companies, and I think you even tweeted some of them out. We see some of the old legacy having similar margins to Tesla right now. And as Tesla's margins come down, they start looking like an ordinary car company. So if another part of the business like energy doesn't come up quick, it's going to look like it is a car company. And I never said it was just a car company. But when you take margins down and it looks like margins of some other car companies and there's nothing special there and growth is slowing, then you have a little bit of a problem when you're a growth stock and you're not able to deliver the margins that you were talking about as industry leading. And the growth is slowing to maybe something more in that 20, 30% range. Again, maybe because it's macro, I get it, but it's just a fact, right? Every company has to go through it. So again, long term, like Herbert's saying, and I want to say this real too. Herbert, when he speaks, he's talking as an all-in long-term investor. He literally has all his money in one stock and he plans to hold it for 10 years. That is not my strategy. So anybody not familiar with the show, I do lots of different things. You can get, 5% right now, money market sitting there like cash. You got, 5.25 and 3-month treasuries. If I think there's a bad macro going to buy if quality stocks go on sale because of what the Fed's doing. So there's lots of different things I'm doing. I'm trading. I'm in and out of different things because I think that we're in a very uncertain time. So Herbert's strategy is completely different from my strategy, which is completely from Jeff and Gary. He runs a fund, so he has to do certain things. And Alexandra has her way of doing it. So there's not a right or wrong. We're just here and we give our point of view. Hopefully people get good things out of it and educate out of it. But that's the difference between me and say Herbert. I've never been an all-in Tesla investor. I had a nice chunk of money in there in 2019. I've done very well with it. I think the company's great and it was amazing. But at some point you have to look at reality. And when the story changes a little bit, you don't have to stand there and just say, I got to own everything I own from 2019 and just ride it out and take, a 50 or 60% decline. To me, that's silly when you have a huge amount of money that you're dealing with. If it's a small amount of money and you're building and you're snowballing, I would rather do an index fund doing that, and you're just building dollar cost averaging. It's even risky with one stock because there are stocks that go flat for 5, 6, 7 years. We talked about that, and you have a lot of opportunity cost if you're in the wrong stock and you don't get this return that you're thinking. So I don't want to kind of relitigate what we talked about last week, but that is the difference between me and Herbert. Herbert is all in Tesla and he plans to be there for the next 10 years. I do not.
Christian, do you have a car? I mean, I know everybody else of us four has, but do you also have a car?
I have
No, you don't.
I don't have a Tesla. No.
But you don't have a Tesla. You're the only.
How do you get around?
So I have a car.
Huh?
I have a car.
Oh, she just asked if you have a car.
What's that? No, I don't have a Tesla. I have a car.
Oh, a car.
I think all other four of us have a Tesla, right? Or at least one Tesla.
Yeah. My next car would be a Tesla. I don't drive as much anymore. So the last time I bought a car, I still have it. So, and it's fine. And I don't do a lot of driving, but my next car will be a Tesla. I love the Model 3.
And which model? The Model 3 you would buy?
Yeah, I like a small zippy car. I don't need a lot of room and everything. So it will be I love Tesla the product. On this show though, we're talking about stocks and valuation. So it's a different thing, right? You could love a product, and like Gary said, it might not be the right stock at the right moment. That's all. And I might be wrong. Maybe Tesla doubles in the next 6 months. That's great. I hope everybody.
Okay.
Yeah.
Okay.
Well,
I want to get to
quicker it doubles.
I want to get to Alexandra, but of course, we invited Gary here, so let's have Gary share a little bit of his thinking and some of his strategy and plans and anything you want to talk about, Gary.
Oh, and tell us about your Q2 delivery estimates and earnings per share numbers and whatever. I'd love to hear those.
Okay, so I have this nasty echo. I'm going to try to get rid of it first. Hold on.
While Gary's doing it, just one quick comment on the gross margins. They were, if you waited, if you were in 2019 looking at Tesla, the gross margins were less than 20% throughout the entire calendar year. I'm just looking at a chart, and they just started cresting over 20%. I think some point in 2020 where the spike, where the stock took off, and it basically when it had that big run to 1.2 trillion, it was between 20 and 25%. It ended 21 at 20%. So I don't know. I mean, I think, the GMs and ebb and flow, but it wasn't like it was at 35%. And, we have a fledgling company now.
Can you guys still hear me?
Yes.
Yeah, Gary.
So, back to where we were, I guess I'm not a short-term investor. We don't trade. And so I want to, stop you on thinking that we're just looking at short-term stuff. When we try to decide what we want to own as a stock, we look for, conviction, and we look for highest probability weighted upside versus downside. And the challenge for me is, while we think there's a $320 valuation in Tesla, and that's going out to 2030, looking at EV adoption in the industry, looking at it by market, and then trying to figure out Tesla's share within EVs in each market, trying to put an average selling price on, put a gross margin on, back out operating expenses. We come up with $320 in valuation. And yet, when I'm looking at this year and I'm looking at how the stock's probably going to perform, I'm more thinking expectations are way too high this year. And I felt that way for a long time. And when I have Elon saying, we're not sure, technically we could take prices down further, that scares the Jesus out of me, because I'm looking at it saying, why are you taking prices down on Model Y, which is going to be the best-selling product in the world, best-selling car in the world this year? And then I hear this mixed message of, we're trying to drive affordability, and yet we're also trying to clear up inventory because we're trying to match production and deliveries. And so what is it? Is it you're trying to drive affordability, or is it that you're trying to clear inventories? Because if you're trying to clear inventories, this is going to continue to be a problem quarter after quarter, which means prices are going to keep coming down. And what's been most interesting to me is, since they embarked on this strategy, which you could say that was January 12th when they first cut prices, analyst estimates for volume have not moved. In fact, they've actually gone down a little bit. So most investors, and you could use the sell side as a proxy, but I talk to a lot of buy side people as well. Most investors are not thinking this is going to drive volume because of what we talked about. The demand elasticity for Teslas is actually low, contrary to what Elon keeps saying. And you said it in the first quarter. We saw 4% quarter-over-quarter volume growth. We're looking for about 440 for the second quarter. I know Troy's much lower than that. So we're not looking for much volume growth in the second quarter. And I think there's a couple reasons that everybody has to kind of either say, yes, I agree with that, or no, I don't, of why you're not seeing much demand elasticity. One is that you've had the early adopters who were very focused on, saving the planet. They bought their Teslas. And now, in order to get that next layer of non-EV consumers to buy an EV, you got to be able to convince them that all their fears and their concerns, one is charging convenience. They're afraid they're going to run out of charge. Two is they think the costs are high, right? You got to overcome those fears or those concerns. And Tesla's not doing that. Tesla's saying, well, they'll figure it out. They can go on our website and figure it out. So to me, that's just a miss. You mentioned lots of new models. You can actually quantify all the models that are coming out. Tony Sakinaki actually he's got a beautiful chart, and it's got 390 new models that have come out, net of retirements in the last 3 years versus 130 in the prior 3 years. And I tweeted out today the new BYD Seal. They tend to be at the lower end of the price spectrum. So the BYD Seal is a 4-seater. It's got it's got an 80 mile per hour top speed. It gets 250 miles on the bigger battery charge. I think 190 on the less one. And it seats 4. It's a hatchback, and it costs $11,000. And so that's something that is going to continue to be a problem for Tesla because they're priced way above $11,000. If you look at the Model 3 in China, it's about $30,000. So until they get that $25,000 vehicle out there, they're kind of stuck because they're not in that TAM. Third thing, which is, we haven't talked about this, I do believe that by announcing these price cuts, price cut after price cut after price cut, you train people to wait for the next price cut. And I do believe that's why they raised prices last night on 3 and Y in both China and in US, but not in Europe, because they wanted to send a message, hey, if you're waiting for further price cuts, they may not be coming. And then you got the ubiquity factor, which a lot of people talk about. If you've got a Tesla on every corner and your neighbor who has a house that's worth half as much as yours, and he or she's driving a Tesla and you're driving the same Tesla, it's not as special as it used to be. So I think all those things are causing the demand elasticity to be quite low on Tesla, despite what management says about it. So I go back to if Tesla was cutting price and getting some volume in return, I would be more excited about it because then they could beat on the estimates. But as Christian pointed out before, the estimates now for 2023 are 350. The estimates for 2024 are actually below $5, and they keep going down. And that's what causes the stock price to go down. So I need to be convinced, and management could easily send a signal somehow that the margins that we're going to see in the second quarter, the gross margins, ex-reg credits, which we think are going to bottom at about 16 for second quarter, that's the bottom, and they're not anticipating it's going to keep going lower. If I could see that, I would be more bullish on the stock because that would mean to me that my estimates are probably too low. But at this point, I don't have any conviction in that. So that's why we're kind of lukewarm on the stock, even though we keep it because it still has tremendous value because of all the things we've talked about. EV adoption's going through the roof, CyberTruck's coming, the $25,000 vehicle's coming, the energy business is on fire. Those are all positive things, but that's not going to help this year.
I think that was well put and pretty good succinctly, Gary. Kind of where I'm thinking about similarly. Go ahead, Herbert.
Yeah, and I agree. I agree with Gary as well. Even though I don't like some of the stuff you say, I prefer it would be different. And I've, if I would have management's ear for half a minute, the one thing I really would like that they do is that they adjust guidance in the trimesters, in the quarters. They just leave these bubbles after the earnings call, and then we find them again 3 months later, and there is no adjustment in the middle. And I think this is really what keeps us all guessing, second guessing, downside, upside. It's not the right way to do. So that would be my big hope that one day they learn how to correct their guidances.
Yeah, I don't think anybody in this call disagrees with short-term pressure on the name. If somebody does, speak up. It's more about how would you know when to get in, and with all the upcoming catalysts, how would you be able to time it, or or maybe you're just
Price
okay
action.
missing 10
Price
to
action.
20%? Well, I mean, I don't know.
Yeah,
So
I
that's
mean,
the only
price actions.
piece of it.
Yeah, I hear what you're saying, Jeff. I think, look, some people aren't, especially with Tesla. Like, to me, being out of a name, I don't worry about it because price action is going to tell me all I know. Tesla's sitting there. Everybody's been calling, oh, it's going back to 250. Herbert's been saying it's going back to 400. Like, and I keep telling him, no, it's not.
Nobody said that.
I'm trading it, and how do you know when to get back in? You're right, I don't. But a little bit ago, we thought 200 was a great price for Tesla.
Yeah.
Guess where we are now? What are we at? 160.
Yeah.
Okay, so even if Tesla rallied a little bit and I picked it up at 180, it's getting some momentum. Maybe there's some good news. I'm not that worried about it because I owned it at higher level. Like, it's not even an issue to me. Like I can pick up some shares now. I think it's a decent value now. But, could it go? I think the risk is to the downside in this macro because if the Fed, again, this is just the way I think about things. If the Fed comes out tomorrow, does their 25, and I've been saying this the whole time, everybody's looking for rate cuts. The market's been looking for rate cuts, and I'm telling everyone it's not coming. And they've said it's not coming, and I believe them now. And we got more bank failures, but the Fed's in a rock and a hard place, and I think we should delve into this a little bit. The Fed sees these bank failures, right? They patched up SVB, and now Jamie Dimon got First Republic, but now we got a whole bunch more, right? So credit is drying up, and when credit dries up, the economy is going to slow more. But the market's hanging in there. We have unemployment at record lows. So is the Fed and Jay Powell? They've been talking about inflation, inflation, inflation. We have still a decent economy at say 1.5%, 2%. Unemployment's at low levels. The stock market's not falling off a cliff. Why would the Fed pull off the accelerator for inflation when we still have 5% inflation and it's sticky? Services inflation is still high. We still have unemployment and wage growth. I'm thinking Jay Powell's going to say, you know what, 25, maybe he pauses, maybe he doesn't, but I don't see any rate cuts anytime soon. So in that environment, we're going to be in this high interest rate environment for a while, and we still have a lot of those cuts to come through. So it's hard for me to get super excited. Anything that's tied to the economy here, and Tesla is definitely tied to the economy, and Elon's made it known that Tesla is definitely tied to that interest rate in the economy. So that's kind of more of my thinking. So let's see what tomorrow brings. But I would love to hear anybody else's macro forecast. I think I may differ from some of you guys.
Look, you're gonna have a one and done, I think, signal from the Fed. Just to answer your question, I think they're gonna raise tomorrow because there's 85% chance, and they would look like they're panicking if they didn't raise. But then they're gonna somehow signal to people that this is it for a while. And they're not gonna say, hey, we're not raising rates again for the rest of the year. They'll say things like, we have concerns about, the banking crisis. They'll say we're satisfied with the progress we're making on inflation. And look, nobody's looking at year-over-year inflation. That's crazy, right? That's 11 months of data, and then you get 1 month of new data. If you look at the last 3 months, or even the last month, and annualize it, you got inflation running at about 3 to 4%. It's not 5 or 6 anymore because a lot of that was COVID-driven. There was a lot of supply constraint given, and the Fed's not stupid. The Fed is looking forward and saying, okay, where's inflation going to be over the next 6 to 12 months, not where's it been the last 12 months. So I think they're going to pause, or at least signal they're going to pause tomorrow. And then, a lot of people refer to this as a dovish hike. And I believe that once that happens, people will realize that the Fed is no longer going to be raising rates the rest of the year. And that should usher in lower treasury yields, 10-year treasury yields. That should usher in people worrying less about the Fed breaking something. It should take some of the pressure off the banking system because they just keep raising rates. So money market yields are higher than what they're paying on CDs, which is what's causing the outflow out of deposits. And that should relieve some of the pressure on the system, which the Fed has to be watching. It can't just be ignoring 3 major banks go belly up in the space of 2 months, right? So that's my view.
Yeah, I agree with you, Gary. I differ a little bit here because I think you're giving them too much credit. Like the Fed, the Fed did the printing of the money during the transitory statement. And now they're raising rates into bank failures, right? So
They're slow.
I know we try to give them more credit, but I don't give them much credit. Jay Powell's been focused on this inflation, and the last couple of inflation data points haven't been that great. They've accelerated a little bit, right? It hasn't been coming. It was a little bit of a blip up. So I don't know.
0.3,
I mean,
0.3
I
last
could be
month.
wrong, and maybe you're right, and they're going to look at it. But I think right of now, I mean, I don't think it's going to be a dovish hike. We could be surprised, and that's the downside to the market. What if it's not a dovish hike? What if it's a hike and it's a neutral to hawkish hike? Then we got some problems, I think.
Yeah, because
Yeah,
everybody
I think
expects to see a dovish hike.
no, I think we're ignoring some of the data that's just literally right in front of us. I mean, we're talking the U.S. economy, and if you even look at the last 20 years of auto sales in the U.S. economy, and you look at the Fed funds rate, and you look at average auto loan rate, this is not the worst year. This is not the highest Fed funds rate. This is not the highest average auto loan rate. I think there's other factors you can obviously look at.
Wait. You haven't seen my slides yet.
Yeah.
Yeah,
Well, I mean,
there's
there's a table of data. We went through it yesterday on the call, and I'm not going to go into financing at all, Alexander. I'm just going to state that there's 17 million.
Go ahead, Jeff.
I was going to say there were 17 million cars sold in a much worse interest rate environment, and the SAR from last year in the U.S., I think it's up 10% this year, and I think all the we'll see what Ford says today, but they're also fairly bullish on their guidance. So there's data points here that aren't connecting. And I agree with both of your comments on Elon's comments on the Fed. I don't think it doesn't make me feel good as an investor as well. But if you look at the earnings trend, all those other CEOs are not active on Twitter. And if you actually went and looked at their earnings transcripts, either them or their CFOs call out macro risk, all of them. So to say that this is just specifically a Tesla issue is just not the case.
But GM didn't, Jeff. GM said this was a great environment for them. They didn't really call out macro, and I doubt Jim Farley will tonight. I know they raised, but they all call out macro risk. I'd be shocked if we went through an earnings transcript and a CEO or CFO didn't mention.
But Jeff, I think that's a standard disclaimer. I think Elon emphasizes it where they are just mentioning it as a risk, but I think Elon emphasizes it as a major constraint to his business.
He does,
that's what he did on Twitter the other day. Somebody posted Toyota's numbers. I think it was Value Analyst, and Elon said, "Well, everybody is struggling with the fact that the banks aren't providing financing," and he's focusing on 3 failed banks as the reason for Toyota being not great. No, that's not why Toyota's not doing well. Toyota's not doing well because they don't have any EVs, right? So I just think Elon blames macro a lot, where I'm not hearing Mary Barr or Jim Farley do it. They may change and suddenly start blaming it tonight. And look, if they don't, I guess it was Christian's point, if tomorrow they just take a very strong-willed approach and say, okay, we're going to keep raising rates, you're right, they're going to break something. But I don't think the first quarter GDP was 1.1, it was down from 2.6. Really should have said to people, okay, that's why we're having a hard time generating sales, because GDP is unemployment is the lowest it's ever been, right? So the economy is not that bad as of today. Will it get bad if the Fed doesn't stop raising? Absolutely, but we're not there yet. So.
Right. I was just really honestly responding to the comments of macro and what they may do to automakers. Automakers are saying it's strong, and then Tesla is an EV manufacturer growing at 50% inside of this auto macro that they say is strong for this year. So I don't know if is what is going to get Tesla this year. I think they're going to be under some pressure. They are under some pressure. But to say there's going to be some major calamitous event because of macro to Tesla, I don't know. It's hard to see and say. I'm not saying it's impossible, but they're fairly well insulated based on EV demand inside of macro auto demand. Now, there's a lot of people that want to buy cars.
Yeah, and I agree with you, because Elon started, no, it was me interrupting you, sorry. Elon started blaming the Fed and the macro already well into Q4 2022. So that's 6 months ago. And I just think he's been overdoing that. And I really believe, first of all, there are solutions for it. And we don't live in 2 different macro environments. Tesla doesn't live in a different macro environment than everybody else, yet he tries to blame it on it. He tried to blame the stock price in Q3 and Q4 on it, and now financing and lack of financing for certain Tesla buyers. I actually would like to sometimes really have it more precise. Is that for US buyers? Is that for worldwide buyers? Because Tesla does financing more aggressively in other parts of the world. But anyway, I just feel there is a little bit of a reality check between, what we hear from Elon and what's really happening.
Yeah, it scares me. It scares me when I hear CEO constantly blaming the economy. That's like a red flag to me. Now, if everybody else was blaming the economy, I would say that's fine. But you don't hear that in the auto business that everybody else is blaming the economy. In fact, as Jeff said before, you actually, people are talking about how strong everything is. So that just makes me a little nervous that he's seeing more weakness than he's letting on, and he's using the economy as his reason.
Well, one reason is that there is no buffer, right? First of all, there's no financing arm, and second is there is no dealership buffer, right? So that could be lagged for 3 to 9 months. That there's certainly some of that, and I mean the other OEMs, they're crisis proven, right? They have 100 years on their back with lots of different crises they had to deal with. So they know how to steer into a crisis, that big boat, because they have a couple of levels they can pull. While Tesla is just brutally honest, has their prices. We love that about it, but that's why some of the information we get is raw and is more difficult to really place into the right environment.
And real quick, for 10 seconds, I mean, they were also backlogged coming out of 21 and 22 for supply. They were backlogged for a different reason. So some of this may be a pull forward or kind of a push ahead. I don't know what you even call it, but Tesla had supply last year. They were scaling their supply chain, and they had parts, and they were able to deliver cars. These other manufacturers were not able to do that, and they don't have these dynamically growing supply chain. They have this static ICE supply chain where they're idling factories when they don't have demand, and they had to idle them for supply. So I mean, they basically they were backlogged due to supply. So that may be artificially pushing up the SAR. Maybe the SAR should be stagnant from last year to this year. It'd be hard to say, but right now it's about 10% higher.
What would you guys think if they were to suddenly cut back on their production? And Troy's talked about that they've been closed from a production standpoint for, I guess, 3 or 4 days in China. What if they were to start doing that across the board? What would that be positive? Would that be negative to you guys?
Wouldn't be unusual. I mean, just from a factory perspective, I think one of the problems with Tesla is we have this 24-hour hourly news cycle with Tesla. But if you step back and look at a production factory, they plan their utilization on a calendar of about 46 to 49 weeks a year. So for a factory to idle 3 to 6 weeks a year, whether it's a supply issue, whether it's an upgrade issue, whether it's a capacity expansion or repairs or maintenance, it's not unusual. I just think we overanalyze it in this community a bit, but it's not unusual for a factory. It's in fact, they're planned somewhere in that region. If you run a factory 52 weeks in a year, you're actually putting your good supply and your good demand actually at risk of something happening where it takes 4 to 6 weeks for you to repair a robot or something. So you don't actually want to run it 52 weeks constant.
Yeah, I'm not comparing it to 52. I'm just saying relative to expectations, because we all have production estimates in our models. If they were to suddenly, start running with, one less shift or run it 6 days a week instead of 7, because they're trying to better match production with demand, would that make you happy or would that make you concerned?
Dropping shifts is a concern. So because you're not in upgrade mode for some portion of that factory. You're running it, for 2/3 of the day. So I would say to you, it's a good point, Gary. If it's dropping shifts, that's where there's a bit of a concern. We saw that, I think, with BYD rumored in Q4 and in parts of Q1. So dropping shifts is a concern. But for a couple of day pause, not a concern, especially over a national holiday where it's actually unusual to staff that holiday.
But not to retrace it, but to Gary's point, we know Q4 to Q1 production was flat, and we know Austin and Berlin were ramping. So we know that production they're throttling somewhere, whether they're throttling in Shanghai, somewhere had to slow down. You can't have Q4 production equal essentially Q1 production, and you're ramping Berlin and Texas and not have slowed production, right? That wouldn't have made sense, right? Something had to come in. Somewhere had to come in. No? Am I thinking about that
Yeah,
wrong?
they
Garrett?
closed.
Or Jeff?
They slowed Fremont at the end of last year, if we remember, and they took the Chinese New Year off this year.
Right.
So I mean that's another week of production. So there's things to point to. And also they do have the inventory carryover at a higher level to match also a higher sellout level. So they are carrying over more inventory than they have in quarters past. So when you have that buffer and you're able to do different things. But normal production line, you actually don't want to be running every day of the week. Something breaks.
No, I get that. And I'm just trying to think if we get to the end of the second quarter and days of inventory are now 22, because again, they produced another 40,000 in excess of deliveries. That's going to cause investors to get nervous again and say, what are you doing? Right? Because if you see more price cuts, particularly in China, which seems to be the most competitive, that'll make people nervous. But assuming last night is a signal to say, okay, we're not going to take pricing down anymore. You're sending a message to consumers. Suppose they don't cut prices again in June to clear out the excess inventory. If we get to the end of the second quarter and we see production is way in excess of deliveries again, that's going to scare investors. It'll scare me.
Okay. Yes, it's going to scare investors, but they've already communicated this, I think, quite clearly, right? You've got two factories. We're going to scale. I'm still going to hit 1.8 to 2 million. My focus has been 100% on cost reduction. I trust it much more when I hear Tesla saying that the macro is affecting car sales. And then you're saying, well, Ford and GM and others haven't. Well, we know that they do channel stuffing. We know that they're financing. They say things and then wait until what happens to their actual financials that come out later. So I'm not going to give my, I trust them more than I trust Tesla. Now, they're going to create the products as many as they can. That's their goal. They're going to might have to cut prices. Yeah. Okay, go ahead and do that. And what's going to happen to margins? Going to get hit hard. So as an investor, yeah, you might have to swallow that for this year, but they're going to create production. They've already communicated this. If they can reduce cost, if cost of goods actually show up now in the second quarter and the third quarter, they spent 4 hours on Investor Day talking about what they're doing. If that shows up in the next 3 quarters, margins will not be taken as a hit as much as we think it can be. So I look at it as a business. I don't look at the stock, because if I look at the stock, and all of you guys were saying earlier, well, the stock is now fairly valued at 200 or is fairly valued at 150 because that's what the stock is: supply and demand, buy and sell. I just look at the business and I see, are they succeeding? Are they going to win this market big time? We all agree in this call that EV market share is skyrocketing and still going to skyrocket in an exponential curve, especially with regulations coming. So now it's whoever can create the most scaled production ever. And so by next year, I'd rather have Tesla come out with 2-3 factories that are fully scaled, suffered this year. And then what's going to happen to all the other manufacturers who cannot produce an EV, especially when they are cutting their, I can 4 or 5 companies just this week talked about all the problems they're having, cutting bolts, Lordstown going on bankrupt. Every company is suffering big time. And then here we are concerned about Tesla hitting an 18% gross margin, and you're worried about price cuts even further. I'm not worried. It's going to hit the stock because margins might go down, but maybe in the second half, it might improve because of cost margin. So that's what I'm hoping is it's going to happen. But it is the macro. So that's what's happening. So
does Gary have to
good,
leave
Herbert,
soon?
I like that. Oh, go ahead, Jeff. Go ahead.
Gary,
go ahead,
are you okay or?
No, I'm good. I mean, you guys talk. I'll put my 2 cents in a little bit.
I didn't know if you had to leave. I just wanted to see if you needed to wrap up or not.
Yeah, I have to watch Match when it comes out. Yeah, look, my only worry is that if production is, let's say, 2.4 and 2.5 and deliveries are 2.1, that's an imbalance, and that just means they're going to try to clear the excess inventory. That's what I interpreted Elon saying on the first quarter call when people were asking. I can't remember who was it. Rod Leish from Wolf was asking him about how do you guys think about pricing strategy, And Elon went into this, we look at it daily and we're constantly, looking at it real time. And then he said, we try to clear inventories when I'm paraphrasing, when production way exceeds deliveries. And that's what I'm worried about, that they just keep ramping up production at a 45 to 50% rate. And deliveries, because they don't advertise, and they've gotten early adopters in because of ubiquity, because of all the new competitive models like the Seal at $11,000 and others, because production is so much ahead of deliveries, they just keep cutting price every quarter. I would think, even Herbert, you would get concerned about that. No? Am I missing something? Or no? You don't care?
He's not concerned, Gary.
Yes, I do care. Of course I care. I'm just replying to somebody who's saying this to me there too, that I'm immune to new info. Are you kidding me? Who do you think has more info than anybody else in this call? I have every single graph. I have every single table. I keep track of every single tweet. I do a daily talk show about this. I know everything that's happening. And so when somebody like Christian says something that isn't true, I can step up and say, well, that's not true.
What did I say is not true? What did I say?
Well, we talked about China. We talked about the Hyundai.
No.
We talked about.
What did I say that was not true?
Okay.
I might have had an opinion. What did I say that was not true?
Well, your opinion about China, for example.
Your opinion's not true, Christian.
Yeah, my opinion's not a truth, Herbert. What did I say that was factually incorrect?
You were saying your opinion about China, and then you have to add additional information about why Shanghai is delivering.
Well, that was my opinion. No one has truth on that. That's an opinion.
There's a fact to it, though. I just explained the fact after I told you the fact.
What's the fact that I got wrong?
The fact is Canada has its version of an IRA.
Okay, I already said it.
You said that Tesla would prefer to send the cars that they make.
I didn't make it a fact. I said I might have that.
Then we're on the same page.
Wrong.
We're on the same page. So I'm here to clarify the facts.
But I don't know that you're right. What I'm saying is I don't know that you're right. I don't know that I'm right. I speculated something, and I said I may be wrong on it. So I didn't
exactly. When you speculate, though, I need to confirm to make sure that the right info. But so it's not true that I don't worry. It's not true that I'm ignoring the facts or that I'm being like this. Oh, everything's great. I'm very, very clear.
Okay,
Christian, can you please let me speak?
You said that you did. Yeah, but last week you said that you did not mind the strategy. You liked the volume over strategy. You didn't worry about the price cuts.
Can you let me speak? Christian, please, let me have a bit here. There are things that I agree with and there's things I don't agree with. I absolutely love the strategy. The volume versus margin strategy is an amazing strategy. The pricing variability is an amazing, brilliant strategy. Now, am I saying that because I'm bought into this dream and I'm like, whatever Elon says is correct? Of course not. I have said many things about what Elon's doing, what Tesla's doing is not correct. But I just want to, very much, if I step back, I'm a product manager, I'm a business owner. I look at what is happening in this industry. How would I run it? I do the exact same thing. I've got 3 factories, 4 or 5. I'm going to make them scale as fast as possible. I'm going to have to suffer margin this year. I don't worry about the stock price this year. I worry about the business strength and where it will come out next year once macro and growth turns around. And I don't use the stock price in any way to guide how good this business is doing and whether or not I should be doing something different this month or not. And that, it's fairly priced. We should not be looking at the price of the stock.
Okay.
I look at the company, and if the company continues to succeed, it will have outsized margins, more than what we were expecting last year. Next year, it'll have more margins than we were expecting and even more following because of what they're doing today. And so, yeah, I told you already, I get that margin is going to be compressed this year. That's a fact.
I'm with you, Herbert, and that's what I said earlier. So what I said is we have a different strategy. I do worry about the stock price. If a stock price goes from 400 to 100, I worry, especially if I own it at 400. You don't. That's the difference between you and me. I want to sell it. Yeah,
because I own the stock a lot lower price than your 400.
And wait for it to go back to 600. I want to make sure that I'm somewhere in the valuation where I'm going to get a return on my money in a reasonable amount of time. It's a different strategy.
It's a different strategy. There you go.
Yeah.
Herbert, have you ever not agreed with, and I'm asking this because I don't know, have you ever not agreed with an Elon Musk strategy? Have you ever on this show publicly said, I don't agree with this strategy? Or have you always been agreeing with him? And I'll ask Alexander if he's ever disagreed with Elon's strategy. Alexandra, has he ever disagreed?
I don't know for Herbert. You know that I do regularly, so you don't have to ask me. But I think Herbert is really a true Elon and Tesla fan, and I do believe also he has analyzed how long. I mean, you've analyzed how long you want to stay invested, so you can be calm, right? You don't need to worry
and it's okay,
about
Herbert. We're not saying
right.
you're not a great investor. You found Apple. What I'm saying is you do believe in Tesla for the long term. You essentially are an all-in investor. You're coming from a completely different view than someone like me or Gary, and that's okay.
That's all true.
There's nothing
That's
to be
exactly
defensive
true.
about. There's nothing to be worried about.
I'm not being defensive. People are asking questions. I'm trying to answer the question. And when somebody says something that's not true.
Do you think your strategy of all-in Tesla and holding that strategy, and I know a lot of people do it on Twitter, and that's great, and they may work out well. Do you think that's a conventional strategy, or would you say that's a strategy that could be most people would not
as you've pointed out many times before, every person is very different. And depending on if I was young, if I was old, if I had family, didn't have family, all of that would decide what I should invest in and whether or not if I have my knowledge in the areas. And I'm not all in Tesla, as I think we've mentioned before. I've got cash, I've got houses, I've got RSPs, which is the equivalent of RAs in Canada, that's invested in Apple and Amazon. So it's not this idea that I don't. Again, it's not like my strategy is better than your strategy. We've already talked about this a million times.
Yeah.
It's a whether or not is Tesla a great company or not. Is Tesla a great company or not?
Yeah.
And what is Tesla? What is Tesla? When I ask you guys the question, what is Tesla? What it is to me is it's an innovation engine. And so they happen to have created automobiles first. Now they're creating energy packs. Now they're doing robots. And they're going to create things, and they're going to be able to, I trust their innovation culture and the company more than I do any company, more than Apple. And so I have not ever seen a company in my lifetime that has the ability to be innovative. If you can be innovative, then it doesn't matter what happens to you. You are more likely than the other companies to survive and to thrive. And so that's where my trust in, not that do they make mistakes? Of course they do. Elon makes mistakes 100% of the time. In fact, I'm the one that tells people all the time. So Gary, let me just answer that question for you. Like, every time Elon does something, people go and say, my God, that's 4D chess. No, he has done so many things that he retracts immediately because he's very sensitive. He'll just immediately just say something and he realizes it was a complete mistake. When he spends time thinking about a strategy, especially these things that are long form, I trust that strategy more than any other person on this earth. He's probably the best businessman ever. But does he make mistakes and has stupid ideas? All the time. He himself will tell you that he does. So I'm the last person to say everything he says is God and it's like 4D chess. I laugh at people who say he's always 4D chess. Not everything he's doing is 4D chess. I'll tell you now, though, his auto market strategy is 4D chess. We've got videos of him in 2012 outlining exactly how this is all going to fall down. And he's precisely on accurate. These things that he's got like 5-10 years as a business strategy, he's dead on. And so that's why when you say things like this, Gary, when you go, price cuts, it's hitting the margins, is that a right strategy? It is the strategy for Tesla. Accelerate sustainable energy, get as many cars to be EVs, which has happened. So now there's nothing to stop this acceleration for EVs anymore. Agreed? So now is who's going to produce the most cars to fill the demand? Now you're concerned about demand. Is there demand this year because of a macro environment that's affecting every?
It's not macro.
Well, that's our difference right there, right? When he says that people, whenever they raise interest rates, it's as if it's equivalent to price cut. This is a high value asset company. And I know you've done your thing that if you do a financing, it's only a $200, $150 difference.
$70.
Yeah, I get that. I've heard that and I understand that and I agree with that. I think that that's true. But it's like, so you guys are both have concern of whether or not there's something that Tesla's not telling us, something about Tesla's happening that maybe haven't seen that yet. And until you show me that data, then I'll go, okay, you're right. And I'm not against it. It could be the case that there's not going to be demand this year. But I still agree that even if the demand has fallen, and even if they continue to cut prices, it still hasn't caught on. I can agree with you with that, Gary, but I would then want them to cut more prices. I'll cut more prices to sell what we can create, to bolster up to make all of our factories to be humming as efficient as possible. because the moment that it turns, we're going to be skyrocketing like crazy. Let's think of ways to make the margin up later. I get you, but it's going to be short-term pain. But oh my God, this is the greatest strategy in the world. I'm happy to be invested in this company. I don't know any other company that has a better balance sheet, that has a better management, that has a better innovation, that has better products in multiple categories. By the way, as we all know, this is no longer an auto industry. So we know that they're targeting segments that is bigger than the auto market. And so, yeah, I'm very happy with this investment. I don't know another company. I'm certainly not going to pull up my money to move to Chipotle. I might make money this 6 months in a year, but I don't see Chipotle going 10x or 20x in 5 years.
Okay.
That's
I gotta go do my earnings. Look, I don't disagree with you on what you said about the company. I'm more aligned with Christian that the stock may struggle until we know where the bottom of margins is. That's all. And it's not that I don't agree with what you said about demand.
Which
They're
I
gonna
agree.
have very ample demand this year, probably 35% volume growth. But if production's increasing at 50, that's a challenge to the stock. Okay. There's
I
nothing
think
to worry about.
everybody on this call agreed to short-term pressure, right?
Agreed.
Okay. All right, guys. I'll see you.
Thank you, Gary.
Thanks a lot, Gary.
Alexandra, do you want to do the car finance? I think it's a really good topic. I really think people should see this.
Oh, I'd love to. I mean, but if Jeff or Christian want to add anything to your discussion with Gary,
well, we should get to what Alexandra has. I was just going to make a quick comment. A lot of these discussions are started and they're not actually had in their entirety. So when we hear the comment of the competition is coming, and you just look at the forward earnings, they had minus 102% margins in their EV division. So when we talk about like Tony Saganaki and the number of models, I wish Gary was on, but like the number of models coming on all these different conversations, you have to have the conversation in its entirety. You have to look at the EV growth as a percent of total auto and look at the size of the pie. Number one, the size of the pie is actually going to outstrip the number of entrants that are actually going to be able to supply cars. That's a fact. That's a fact for a number of years. And then now when you layer in gross margins building EVs, I mean, Ford has publicly said that they're targeting mid-single digits in a couple of years from now, which means they haven't designed the vehicle yet. It's not driving on the road that is capable of even having 0% gross margins. And as you can see, they're at minus 102% as reported this quarter. Same with GM. They're at negative gross margins and they just end of life their highest vehicle. So when we talk about competition, I think we have to discuss volume and supply, not just number of models. And I also believe we need to discuss their gross margins and their ability to capitalize and to scale. And I think I actually believe, my thesis is, if you want to ask me like what I believe that their Gen 1, vehicles that they're going to produce over the next couple of years are already, they're DOA. What Tesla revealed on Investor Day, now they've got to actually produce and realize that. I'm very very real that they have to actually produce it. Right now it's a PowerPoint. But right now Tesla's been able to demonstrate, though, industry-leading gross margins in EV, and I believe that will continue based on what we're seeing from the competition. So the competition is part of the equation. Tesla has their own EPS model, they have their own earnings multiple, I get it. But if there isn't competition there, as that pie grows, they're going to be able to gain more of that supply. So maybe on a follow-on discussion, we can have, if we want to talk about competition, we should have a very complete conversation about competition. And that's just my only point on that.
I agree with you.
I just wanted to, real quick, do you have the earnings? I'm just curious. How did the overline headline look? Was it bad? Was it good? I mean, just a general surface, or did it come out?
They beat EPS significantly. They beat sales significantly. Again, which goes against the.
That's fair. I'm not trying to make a point. I just was curious.
Yeah.
Which also shows that they are very good at preparing everybody for a good guidance and then can beat. This is a little bit of markup psychology. I know Elon doesn't want to play this game, but it is true that we're the backholders for this non-adjustments of guidance. And then there are these huge numbers out there, 1.8 million trying for 2 million. And then people get disappointed, which is, it is just what it is. Do I like it? No, but this is just a fact. It's a shame.
Does anybody here think that Ford and GM are doing really, really well because they beat?
No,
not a second.
Herbert.
I mean, it's
But Herbert,
no, exactly. No, I'm just.
it's a Wall Street game. Since you own the stock, you got to play Wall Street rules, right? And we're just talking about the earnings.
Exactly.
We're not trying to make a point of it. I was just
There you
asking
go.
Jeff, how
Agreed.
did they look? That's all.
Exactly.
So
I
let's
mean,
just- we all agree.
we're playing whether we want it or not Monopoly, and we can't now suddenly say we're playing chess, right? That's just the way it is. We're in a certain environment with which, and if you don't care about the stock price, don't watch it and go back in 5 or 10 years, and that's all good.
I actually
But
enjoy
if-
it. Yeah, to Alexander's
Exactly.
point, I love the stock market. I love earnings. I love listening to earnings calls. So that's where me and Herbert differ a little bit. I actually love that kind of stuff. So good. I love to hear, Alexander, your presentation.
Okay, let's do it. I mean, we can also do it in a special call if you want to, Herbert, but we can do it quickly now. So my idea to help affordability was that Tesla tackles the financing market in a different way. Up to a year ago, up to exactly beginning of 2022, they mainly outsourced financing. So when somebody was looking to finance a Tesla, they would approach third-party banks, the big lenders, whatever, depending on which market it was, Europe or China or the United States, and would just broker it through, get a little commission for it. You actually see the commission in the 10Qs and 10Ks. And then that was it. They wouldn't take it on their own books. Then they started doing it in the first half of 2022. I'm getting later to those numbers. So they have started financing. Initially, I have the feeling mostly in China and Europe. That needs to be confirmed, but I didn't find information for the US for the first half of 2022. And now they're slowly doing it in the US as well. So I wanted to put these slides together so that we understand how important financing is. And no, I'm not saying, just because I can already see it coming, I'm not saying that they should do what Ford and GM did and get over the heels into financial troubles. But you should also know that Ford and GM, and we'll probably see it with today's numbers again, are mainly profitable because of their financing. There is lots of money to be done. And as I explained earlier, it is actually a buffer for crisis times, because you can suddenly put out very attractive financing rates on which you make a little loss, but you keep your prices up, right? So yes, it will be a little loss, but it won't be a 20% price cut. Now, let's walk through it. So currently in the US, and I don't have for all the markets, all the data, but I try to be as complete as possible. In the US, 83% of new cars are financed. This number has been stable, over 80% all the time. Used markets don't look at it, that's those red bars. So 83. Of those 83%, 20% are leases and 63% are financing. So only 16%, I'm trying to go quick, only 16% are cash buyers. Next slide, please. So the same day we got our second investment grade rating. Remember, we had in October the S&P upgrade, and then in March 20th, the Moody's one, which should help us with being able to refinance and get money if we don't want to stem financing from the cash position. The New York Fed published this survey where it says very clearly that in the recent month, the rejection rate for auto loans has increased from slightly under 6% to slightly over 9%. So it's not a huge number yet, but it has clearly taken a 50% increase from 6% to 9%. Let's go to the next one, which is who is financing. So this is over 4 years. Keep in mind we had COVID. But what I wanted to point out, I don't know whether you can see this, is the credit unions had a big spike in 2022 because the captives, so the captives are the Ford financing and the Toyota financing, whatever, the captives went down and had to go down because of other trouble they had. And the credit unions went up, which is obviously in today's environment in the US, an issue, because as you know, the smaller banks have problems getting refinancing and all the rest. So this 2022 movement here that you see in purple is part of the trouble we're in at the moment. This is only for new cars. I try to always concentrate only on new cars. You can go to the next slide, please, Herbert. So this is what Elon is talking about. Interest rates for a 60-month new car loan, 5 years is about the average usually, went from, well, our nearly zero interest rate period, so it was slightly above 4% for car financing, to now well above 6.5%. So this is the rate. I also looked at longer charts, and there is one later, and we had car financing periods over 10, 12%. So yes, the last 10 years were very comfortable, and it didn't cost a lot to finance a car, but it is obviously very recent that car financing has become much more expensive. Then the next chart is that this reflects, of course, in monthly payments. So here I come to affordability. So this is the 4 credit score from deep subprime to prime. And you see that the average monthly payment has moved up nearly for everybody now between $510 and $550 due to the increase of the interest rate. And then, if you don't mind flipping to the next one, that was after the earnings call. So that's one of my tweets where I explained it really would help affordability if Tesla would argue monthly cost and getting that monthly cost down by now offering financing. Why am I so much after financing? And I've been hammering this for 6 months, and I'm getting a lot of heat for it. It is because by brokering through the financing to the banks, we just saw the banks are not the biggest bringer, and the smaller banks are not doing it anymore. You actually increase the price for the Tesla buyer by the brokerage fees, but also by the fact that these banks want less and less financing to be done. And we get to that point. That's my last slide later on. There are just so much fewer banks who want to finance Teslas now, and there's a good reason for it. So let's continue. So this is the 10Ks and the 10Qs from Tesla. So yesterday I put together these columns, and I'm sorry, I hope it shows on the screen enough. So by middle of 2022, you have the first column, which is how much of these loans that Tesla has on its own books is repaid within the first year. Then it goes into the account called accounts receivable. That's the first 12 months. Or how much has a longer liability. So it's a non-current asset for longer positions between 1 year and a day and the longer position. So end of June, there was nothing coming back in the first year column, but they only pointed out the 320. I think that is a reporting issue. I'm sure part of that would have been actually in the accounts receivable, but they corrected that only a trimester later. So the total amount financed was $320 million. That's for worldwide, China, Europe, and the US together. 1 quarter later, they now split it up between coming back within the first year and coming back in later years, was 76 for the first year and 398 for the later years, so a total of 474. So this 320 amount got added to about 154 million, okay? And by seeing this split, you can calculate that this longer period actually reaches out to 5 years, right? So the first year plus 5 other years. So they're financing for a 6-year period. And then you have it for end of December. So there, the coming back in the first year amount was 121 million, coming back in the following year, 665. So the total now 786. So there they started really to increase the amount they're doing directly, still with assets around 5.5. And then in the last quarter, 191 in the first year, 966. So now more than 1.1 billion. Now, just for all those that are already screaming, oh my God, credit risk and all the rest, this is 1.34% of cars sold, right? This is nothing. This is really, this is really a small amount. And even if it doubles and triples, this is really absolutely nothing. So why did I put this up? They have started doing it. They've started doing it prudently, moving it up in volume slowly over the last 4 quarters. I think we're going to see much more. I've published on Twitter this morning, Norway, Spain, Portugal, Japan, Singapore are all seeing 10-year loans now. Now, it could be that Tesla finds third-party banks that take these on. I don't think so, especially in the US where we don't see them yet. none of the lenders I checked, and I checked loads yesterday, would ever go over 8 years. And 8 is already very rare. I found some 8 offers with Chase and with Capital One, but I didn't find many that proposed 8 years. So there may be, I heard of Santander in Europe doing some refinancing for 10 years and whatever. So who knows? But it seems to be that Tesla is trying to break into that. So my idea was that Tesla uses this inverse and relatively flat yield curve. This is the treasury yield curve. Obviously, you have to put a spread on that to get to the auto loan prices between the 6 years and the 10 years to find the spot. Maybe 7, maybe 8, maybe 10. I don't know, for a couple of reasons. First of all, Teslas have a longer lifespan than any other cars out there. And the resale value during the 10 years seems to maintain much higher, so that if they stop lowering the prices, of course, but the theory is that you also always know where your Tesla is. So if really it would come to a repo, Tesla would have the information to find the car very quickly and make it undrivable and then pick it up or even summon it once we're there. So that's the theory. And the next slide shows what a difference it would make financing the same $50,000 car over 6 years rather than 10 years. You would actually go from a monthly payment of $750 a month to a monthly payment of $500 a month. So and again, in the US, there's nobody who would be the third party to it. So if this is an idea, it would have to be on Tesla's books at the moment. And I didn't find any law that or any one of those regulations that would not allow Tesla to do it longer than 8 years. It seems to be there's still two slides, if you don't mind. Especially my last point. I think my last point is the best one. So if you don't mind the last two, there's actually 2. So this one is showing the difference between a 6-year auto loan rate, that's the yellow line, and I know it shows very little, but that's the Federal Reserve, compared to a 4-year auto loan rate, right? And we're currently in one of those rare phases that we were also between 2008 and 2012, where the longer auto loan come at a cheaper price than the shorter ones. But I just wanted to show that over time. And here you see the beginning of the 2000s being close to 10%. And then the next slide is actually Elon's tweet saying it's becoming harder for people to get car loans. That's why I say, please don't do it yourself, because one of the reasons why it is harder, and I really, if I want you all to take one thing back from it, is this is because Tesla shoot themselves in their own foot by making the price variable. And I mean, this may be a great growth strategy, Herbert. I'm not saying this is a bad strategy, but you're actually putting the former lenders, the banks that lended so far to Tesla owners, the money, in a very bad position, because these banks have the Model X at 120,000 on their books, right, and have a certain repo rate with which they have to deal with, and now suddenly it is at 90,000. They have an issue with those 30,000, right? And the same for the Ys. So and that's been very well explained in the last slide by a banker who did a very good thread called Case Alberta at masto.ai. I really recommend you read that through. It's about 10 tweets long, but he really explained how these banks today are very hesitant in giving loans out for Teslas, because if a week later they suddenly have to readjust their pricing in their books, it's a loss. It's an immediate loss, and it's difficult for them to justify that over multiple months. And so that is the main reason why Tesla drivers have problems today of finding third-party banks. And I think Tesla should step up. If they believe that their policies and their politics and their strategy is the right one, well, then take it on the books you and make it affordable to your clients again. That's it.
Yeah. I mean, what I heard there was that if Tesla does financing, extends it to 8 years, brings down the monthly to $500 per month, that's getting very close to the cost of gas per month for some drivers. And so then it becomes this idea that instead of paying for buying a new gas car, paying for monthly $500 or more for gas, I'm going to go ahead and lease a Tesla for $500. Right? It's a no-brainer at that point. And then that allows Tesla to move to a subscription model.
Sure, because everything is on monthly then. Yeah.
It's a monthly.
I just want to say
Yeah,
thank you, Alexandra, for going through that. That was great. And I think that was great and valuable to the audience. So thank you for all your work you put into that. I really appreciate it.
Thank you,
Yeah.
Christian. Appreciate that.
Yeah, it was really good. The other mega point I heard was around the difficulty of getting loans for Tesla, maybe in some great part due to how Tesla manages their pricing. So it'd be interesting if there's a metric out there in terms of like loan rejections or something that could summarize that. But I mean, I believe the bankers tweet and you know, it'd be interesting if there's other data out there, but that was a fascinating point.
Well, I mean, the
Like a
data
mega
is
point
that
for me.
obviously Elon, the Elon obviously complains that Tesla owners trying to finance have issues. And I mean, I'm not surprised. First of all, the credit unions have stepped up. I mean, believe me, it's not going to be GM Finance or Ford Finance that are going to finance it. So that block you have to take out. The banks have stepped down 2022 anyway. The credit unions up, well, they're nowhere to be found anymore. And then at the same time, those that have them on the books are certainly very hesitant. Do I like it? No, I hate it, but that's just it.
That's a great point. Thank you for putting that together.
Thank
So
you.
don't we all agree here? I know that Jeff, you have some metrics. Alexander, you've said metrics that Tesla has access to tremendous amount of data points. And Elon himself just tweeted recently that he, because of all these companies, he thinks he's the one person who has the most, information about what's actually happening in the economy, or in this case. I mean, if you agree with that case, that Tesla actually has tremendous amount of data in their fingertips that they can evaluate. And I think if you, Jeff, if you go through all of that, it's just going to shocking people what these guys can see and interpolate from that. And if you believe that, why would you then say, "Oh, I'm going to be I'm going to couch manage this from the couch and tell people how they should run the business"? I will. No, I know you don't, but no, not you, Alexander, because I think that what you pointed out here, I truly believe Tesla is going to do this. And like you said, you pointed out that there's already signs that they're doing this. You're always months ahead of what you are seeing as happening. I'm just talking about people like Gary who says, well, why don't you question Tesla? I do, but I also step back and think, do I have more information than Tesla? Do I think that Tesla does not have kind of the simple math to know how much advertising versus how much demand curve? They have that info. It's not like they don't know that information. So
Herbert, I agree with you. Sometimes it's not about information, it's how you use the information. So again, it goes to an opinion point. Tesla might have the information, they might just choose to do it something differently, where someone else would say, I see information too, I would do it this way, but Tesla doesn't want to do it that way. So it's not a question of who's better or who has more information. It's a question of how do they want to use the information to run the business. So, and Tesla has the right to run the business the way they want to run it. And we have the right to maybe bring up stuff like Alexander's doing, or someone has an idea. Elon says all the time, hey, that was a great idea. Maybe I'll try it. Like, we also think that Tesla knows everything. They don't. Like, they have full-time jobs. They're running around running a business. Sometimes they don't have every little great idea. So if they see something, they might implement it. So I think it's foolish to also say, because Tesla has all the data and Elon says, I have all the data, that we can't make recommendations, or an investor can't make a recommendation. So, and if Elon has all the data, he's calling for a major recession, and Jeff's not calling for it. So I'm just saying, if you go with Elon, there is a good chance. I'm not saying for sure.
He's calling
for maybe, well, if maybe
they continue to raise interest rates, he's warning. Not that he's already said it's in a minor.
They are continuing to raise interest rates. They're going to go 25 again.
Yeah, he's saying, he's warning them. If you do, this is what's going to happen. I don't know what's wrong with that.
That's what I'm saying.
Let me add two things. I think when you are within Tesla, you have all this information. You hear that people get refused from financing. You probably think it is because the banks don't want to lend to everybody, right? Because that's just again, lots of credit unions, lots of smaller banks that now are protecting their balance sheets. So your first reaction may not be the right one, because the right one would be, well, we continue to lend. I mean, again, GM, Toyota, and whatever, they have their own financing arm. They don't run to the credit unions first. They may send their clients there, but that's not their first objective. So Tesla may not think the banks actually don't want them because of pricing. That you really have to go one step ahead. But even if they do, let me tell you one thing. When I put my graph out with that, move up the yield curve, do it yourself, somebody from Tesla reached out and DM'd and asked me a couple of questions. How would you do it? What do you mean with asset back? Blah, blah, blah. And I mean, I spilled what I could. I'm not the specialist in auto loan financing, by far not, right? But they are reading our tweets. The guy took notes, said he's going to do something with it. I don't know. Maybe something comes out of it, maybe it doesn't. But I do believe we should bring forward our ideas, even if sometimes they're against the trend, and even if some Uber bulls will scream, and even if some people, I mean, I had on this particular topic a real go with Omar on Christmas Day, December 25th. He was like hammering me to shut up, and this should really not be discussed, and Tesla will never do financing, and this is a bad idea, and we're not GM and whatever. And I kept on going, and why not, right? I mean, sometimes you may see something that somebody else doesn't see, and if we become such a closed environment where there's only one opinion and only one way of talking and interpreting and butt kissing, sorry about the word, I think where she's serving nobody. I think there's a real value of each of us bringing their different perspective, age, trading methods, ideas, and put them out there, let people scream over it, move on. Some may be picked up.
Yeah, I agree with that. Tesla's not infallible. I mean, I think there's a lot of professionals and people on Twitter that have different expertise, and if they wish to comment, or any expertise, I mean, if they wish to comment, it's that free speech, right? What concerns me sometimes is there are declarative statements made about, like, here is their backlog, here is their inventory, they will shut down for this period. I'm like, well, there's people on Twitter that actually believe these things as to, like, it's actually coming from inside of Tesla, or it's a very, very well informed opinion. And I think it's okay to say, look, I think that's a set of data, and that's maybe something you're expressing, but here's some counterpoints as to why that may or may not be the case, and let's see what happens. And so I think there's a fair amount of that happening. Of late.
And
but
I want to
okay.
actually name it, because I'm always big mouth for those things. I want to name it. I am really sad is, I think, the right word, that Troy Presslike is the only person that has some credibility at tracking and provisions, and has a large following both on Wall Street and on Twitter. I mean, I'm sure he's doing a great job, and I find his last 2 weeks of each quarter are getting very close to reality, because in the second half of the quarter, he has a lot of bottom-up data that substantiates his claims. I think at the beginning of each quarter, he is much less precise and has a more vague impression. And I have the feeling that he's taking data sets from people that could, I don't know whether it's doable or not, but that could influence him. And then, since he has such a good, it is then out there and becomes the gospel, right? And I would really, really wish, and I don't have the time to do it. I mean, I don't think it's that complicated to do, but I mean, I've got a day job, I've got family, I've got my passion for the rest of Tesla, and I don't really have the time to do it. But I really wish somebody else would step up and do the same bottom-up work and have a more measured approach to the first half of each quarter, because that's always the one I get personally upset with Troy, because it just goes so much into reading the smoke of the fire without, giving us the real basis for it. And then it gets better. So it's very complicated for me to touch down when it's getting reliable and when it's not. But I'm really upset that he is so affirmative about his stances at the beginning of each quarter, and people take it for gospel.
Yeah, and I mean, to be specific on some of the inventory data, I try to point out like the 360-degree view of inventory. And, inventory, there are a lot of people inside of Tesla that are actually paid to manage it. And it's actually a very small, tight-knit group of people and companies that actually manage, because it's actually a very confidential thing inside of companies to manage. And just we don't have visibility. We have these interesting tracker tools that have come up, and I commend the people out there that are building these tools and putting them online, because it is giving us some level of visibility, but they do top out. And what will happen in some of these situations is you kind of like not knowing what daily inventory means. Like if you haven't been in the situation where you've kind of seen it from years and years, or seen like what a beginning of a quarter means in inventory, what an end of a quarter means in inventory, and if you're launching a new product and you're building inventory, or you're launching new regions, like it has so many different meanings. And just to say like up is bad and down is good, it's a tweet. It fits in 160 characters, but you're actually leaving people with the wrong impression. And again, I'm not saying that people are doing this personally, but in some situations, you can kind of be off to the races with something, and it just may not be the thing. And I was actually making that point of like, we were celebrating after January 12th, like look at the inventory drop off, only to have to be, taking price action again a few weeks later. So these charts have this data has meaning, and I think people have good intentions in general. But I do get concerned sometimes with the analysis that occurs and declarative statements and just like not acknowledging like, hey, it could be, X, Y, or Z. It could be like very logical, very high probability outcomes of what it could be, and just they get disregarded. So to get this back, I guess to get this conversation back on track, I think it's okay in this community to look at different sets of data and to respond in a very kind of fact-based, fact-driven way, to say like, look, I think there's a different approach here, and maybe it should be considered, and leave it at that. I think shutting those people down, like shutting this financing discussion down, or shutting down a discussion of like, well, how do factories run or whatever, I just think it doesn't leave us anywhere. I think having that open dialogue and saying, look, I'm an informed person, you're an informed person, let's have a proper debate and let's air out both sides. I think that's the way to go.
Yeah, I agree. And same with like just promotion of the company, whether you're doing educational EV on a, or advertising, like why is that just stop at Tesla knows best, done? Like that's an opinion question. That's not like an info, like Tesla has the info, advertising doesn't. Yes, it does. No, you got to try it first and see what happens, right? It's just whether you want to do something or not. So again, it might go nowhere, but I mean, yeah, I'm just big on that. Like when someone has an expression or an idea, to just clamp down on it and say, no, Tesla knows everything. Just be quiet. Like that don't work for me. That's crazy.
And I agree with you, Christian. I agree. I do think
Wow.
that they should be doing.
Did you see that?
No, just to be clear, because
Hour and
people are
47
saying,
minutes into the call, and we got one
It
agreement.
only took till
We have
hour
lots-
47 to get the agreement.
No, see, this is the part
And I
people are
agree. I'm
confusing,
just
right?
playing Herbert. I agree with you with a lot.
There's
of
a
stuff
lot
too.
that we
Yeah.
agree with. There's a lot that we agree with, which is why don't they advertise? They will advertise, and they will be doing this. And so it's not like
I'm sure they will too. Yeah.
I'm not of the camp of they should not advertise because they said so and they're right. I'm not of that camp. Just we're lots of conversations here, and my mind has been changed, and I hope yours as well. And so we're very open to all these things. But great conversation. I think we covered a lot of ground today. Great to have Gary here, and of course, thank you so much, Alexandra. That was amazing. You always bring up new information that always seemed to several months later or something very closely. It will happen. I have a feeling this will happen. I do think you're right on.
You never
and then,
know.
we,
like this might get into a Tesla hand, and like we're saying, like Alexandra took a lot of time, and maybe that helps Tesla's business in a small way, and that's a big deal.
That's a big deal. Okay, everybody, thank you very much. And so normally we have CyberBulls at 1 p.m. on Tuesdays Pacific time. Today we started at 12 noon, but next week join us at 1 o'clock. Thanks, everybody.
Oh! Tell them Christian is not there next week, and it's not
yeah.
because we
They're
kick
gonna
him
love
out.
that. They're gonna love that.
Some people will like it. A lot of people will miss it. They love you, Christian. All right, guys. See
Yeah, we'll
everybody.
miss you next week.
Right.